friends. Today this will be our last lecture for budgetary control. So now we are doing budgetary control part 3. This is our last lecture. In this lecture what we are going to study is we are going to study about cash budget. So it's simple. What is a cash budget? A cash budget is an estimate of cash flows. A cash budget is an estimate of our cash flows. We have to identify the activities wherein the cash is going to come in and the activities wherein the cash is going to move out of the business. With the help of the cash budget, we are able to determine the closing cash balance. So this is the main purpose of preparing a cash budget. We should be aware of our closing cash balance. Once we know our closing cash balance, we are aware of how much cash is required for the next activity or for the next month or for the next period. So as such, there is no format of cash budget. So what I am doing is just telling you all how to prepare it. This is a cash budget. Here we are going to write the months. There will be some opening cash balance. We will add the cash receipts. This amount we are going to receive. We are going to subtract the cash payments. This is the amount which we are going to pay. And finally we are going to have a closing cash balance. So it's a very simple logic. You have to start with opening cash balance, you have to add in the cash receipts, you have to subtract the cash payments, and finally what you get is a cash balance. So this is what is a cash budget. So I'm going to start with the sum. So let's read the sum. Prepare a cash budget for 3 months ending 30th June 2016 from the information given below. Feb, March, April, May, June. Sales they have given us, material they have given us, wages they have given us, and overheads they have given us. Credit terms are sales debtors. 10% of the sales are on cash. 50% of the credit sales are collected next month and the balance in the following month. Creditors, material is 2 months, wages are 1/4 month, overheads is half month. So as and when I do the sum, I would be able to explain you all properly. The cash balance on 1st April is expected to be 6,000. So the 1st April, the opening cash balance they have given us. Since we need to prepare the budget for April, May and June, so April will be our first month. Other relevant information are plant and machinery will be installed in February 16 at a cost of 96,000. The monthly installment of 2,000 is payable from April onwards. Dividend at the rate of 5% on preference share capital of 2 lakhs will be paid on 1st June. Advance to be received for sale of vehicles is 9,000 in June. Dividend from investment amounting to rupees 1,000 are expected to be received in June. So let's start with the sum. So I have to open a new page. So we are going to do the first sum of today's lecture. So what we are going to prepare is a cash budget. So we are going to prepare a cash budget. Okay, we have February, March, April, May and June. Okay, so right now I'm not worrying about the budget. I'm just preparing a format which is April, May and June. So April, May and June, we are just going to prepare a format right now. We should have an opening cash balance. We should have an opening cash balance. We are going to add the cash receipts and we are going to subtract the cash payments. Finally, we are going to get a closing cash balance. So this is the budget. So I'm reading the question. They have given us the sales, so we need to do a working note for sales. So I'm doing a working note for sales. So we are doing a working note 1, that is for sales. They have given us from February, March, April, May and June. Okay, February, March, April, May and June. They have given us the sales. It is 14,000, 15,000, 14, 15, 16, 17 and 18. Okay, so 14, 15, 16, 17,000 and 18,000. So these are the sales which is given to us. Then what they have said, sales, 10% of the sales are in cash, so we can do it. Cash sales is 10%, so 14,000, 10% will be 1400, this will be 1500, this will be 1600, this will be 1700 and this will be 1800. So we are aware of the cash sales. So the remaining part would be the credit sales. The credit sales is going to be 90%. So 14,000 90%, 14,000 into 90%, that is 12,600 will be the credit sales. This will be 13,500, 16,000 90%, 14,400. Okay, 17,000 90%, so 15,300 and 18,000 90% is 16,200. So yes, we have done with the credit sales. Now friends, remember, this credit sales part is not at all relevant. We are going to prepare a cash budget, so we should be more concerned that when these credit sales would be realized. So I'm not at all happy with the credit sales. I am more interested in knowing when this credit sale is going to be realized, and that for that we need to read the question. So what they have said, 50% of the credit sales are collected next month. Okay, so 50% of the credit sales is collected next month. So we are collection from debtors, because credit sale is going to generate debtors and these debtors are going to pay us. So when are they going to pay us? 50% of the credit sales are collected next month. Okay, so half the debtors are going to pay next month. So 12,600 half, that is 6,300, half the debtors are going to pay next month. Similarly 13,500, 50%, that is half, 6750 datas are going to pay next month. 7200 datas are going to pay next month. 15300 into 50%. Okay, 7650. Our 15300 50% is the, so these datas are going to pay next month. Okay, so this we have done it. The credit allowed to these datas was 1 month. Next, and the balance in the following month. Balance in the following month means 50% balance will be paid in the following month. It means these datas we are allowing them a credit of 2 months. So again there is a collection from datas, and since these datas are going to pay us following month, means we are going to give them a credit period of 2 months. So 50% this particular data has paid over year, so the remaining 50% will be paid over year. So associate this particular data, 50% he has paid in this month, and the remaining 50% is going to pay this month. So like this we are going to find out the calculation. I hope you all have understood it. Okay, now 50% this data has paid year, and the remaining 50% will be paid next month. Okay, 50% this data has paid year, so the remaining 50% will be paid next month. Okay, since we are going to prepare a budget of only 3 months, that is April, May and June, we are not going to worry about the next upcoming months. So I think I have done with datas. So just what we will do is, we are concerned only with these 3 months. So this 2 part is what I am going to add. 6750 plus 6300, that is 13050. 7200 plus 6750 is 13950. 7650 plus 7200, 7650 plus 7200, it is 14850. So this is what we are going to do right now. This is the collection from datas, and these are the cash sales. Both these items are cash receipts, so we are going to place it in our cash budget. We are aware of the opening cash balance. So how much is the opening cash balance? They have said that the cash and bank balance on 1st April is 6000. Okay, so we have the opening cash balance 6000. Now what is the cash receipts? One is the cash sales. So cash sales we have done, cash sales we have already done here. Cash sales are 1600, 1700 and 1800. So 1600, 1700 and 1800 is the cash sales. The second thing which we have is collection from datas. We can put a working note over there, so it would be a working note maybe 1. So how much is the collection from datas? Collection from datas is 13050, 13950. Okay, so 13050, 13950, and the next part is 950 and 14850. Okay, so we have 14850. So wonderful, we have done this part. Now whatever was related with sales, it has been done by us. Now we are going forward. We have creditors, and the material is there, it means we have purchased the material on credit, and the credit period allowed by the supplier is 2 months. Now the question arises that these 2 months, from when should we take it? Should we take from the month in which we have purchased, or should we take from the month following the month of purchase? So the question is not clear. When the question is not clear, we have to take credit 2 months following the month of purchase. Following the month of purchase. I'll explain you once we are there in the sum. So we have to do something with materials. So I'm going to prepare a working note. So there will be another working note, and I think I'm rubbing this working note, since then I need to scroll down the pages and it will take lots of time. So I'm rubbing this out. I believe in sharing knowledge. So if somebody is having knowledge, that person should be able to share it, and YouTube is the best platform. So what we are going to do is materials. Okay, so I'm going to prepare a payment to suppliers of materials, that is, we have to pay to our creditors. Then from Feb to March, March, April, May and June. Okay, so Feb, March, April, May and June. The material is 9600, 9000, 9200. So we have to write material 9600, 9000 and 9200. Then I need to read it further. 10,000 and 10,400. Okay, 10,000 and 10,400. Now what the question is asking us, the materials are 2 months. Remember friends, in the absence of information we have to take 2 months following the month of purchase. So here is the payment done to suppliers, that is creditors, and we have to assume 2 months following the month of purchase. Following the month of purchase, this should be made very clear to the examiner. So here 9600, this I'm going to pay year and year, 2 months following the purchase, that is this and this. So I'm going to pay year 9600. 9000 I'm going to pay year and year, 2 months following the purchase, 9000. And 9200 I'm going to pay year and year after 2 months, that is 9200. And if you don't take this assumption, you take 2 months from the date of purchase, means alternatively, if the question is clear and if the question is telling 2 months from the date of purchase, so what we need to assume is, this is the month. We are assuming that we have purchased in the beginning of February, so the entire February he is giving us the credit, and by the end of March we need to pay that particular person. So this is 1 month, this is the second month, and second month end we need to pay that person. So 9600 shall be paid here. So there is a slight difference in the assumption, since when we have purchased it and when we are going to pay it's unclear. So we are preparing a budget for, and budget is resembling the end of the month. So it is from the date of the purchase. So we have to assume the purchase is made in the first day of the Feb. So entire Feb and March you can't pay in April, because April will be the third month beginning, so this can't be assumed. So if 2 months, so you have to pay by the end of the March, which is 9,600. So I hope I have made myself clear. In the absence of information, we have to follow this assumption which I am doing it. So I think I have done the payment done to the suppliers, that is creditors, 2 months following the month of purchase. So this is the month of purchase 1 and 2 months. Here we are going to make the payment. 9,000 is the month of purchase, so this 1 month and this 2 months, here I am going to make the payment, and so on. So where we will put this particular, we are going to prepare a cash budget for the 3 months, so April, May and June. So this is a payment, so we have to put in the payment column. So we are going to put over here payment to creditors. So how much? Okay, 3 months are there. So how much payment we have to make them? 9,600, 9,000 and 9,200. 9,600, 9,000, 9,200, and we can give the working note 9,000 and 9,200. So we are done with it. Now sales we have tackled it out, materials we have tackled it out. Now let's see what they have given. Wages, 1/4 the month, so wages they have given, so we have to do something with wages. So I'm going to rub this part. Now we are moving forward to find out wages. We need to pay wages to the workers. So when shall these wages be paid? Okay, so payment of wages to workers. Okay, we have February till June, so I have to make it again. Feb, March, April, May and June. Feb, March, April, May and June. So 3,000 and 3,200. So wages 3,000, 3,000 and 3,200. Now May and June we need to look. 3,600 and 4,000. 3,600 and 4,000. So good. Now wages are paid 1/4 the month. Okay. So what they have said is payment of wages 1/4 of the month. It means 1/4 of the wages are paid following month, that is next month, and 3/4 of the wages is paid in the current month. This you should know. They are not going to spoon fed us about each and every detail. They are going to tell us only one aspect, and the other aspect needs to be assumed. So 1/4 of the wages are paid in the next month, which we have assumed in the earlier part also. It means 3/4 of the wages are to be paid in the current month. So I'm doing it. 3,000 1/4 I'm going to pay next month. So 3000 into 1 by 4, that is 750. I'm going to pay next month 3000. 1/4 I'm going to pay next month, and 3/4 of the wages, 3000 3/4 I'm going to pay in the current month. 3000 into 3 by 4, that is 2250 I'm going to pay in the current month. I hope I have made myself clear. 1/4 of the wages of February will be paid in the month of March, and 3/4 will be paid in the current month. So I'm moving forward. Again, 1/4 will be paid next month. 3000 divided by 4, 750. And again, this part 3/4 will be paid here, which is 2250. So I'm rubbing this part. Okay. Again, 1/4 will be paid next month. 3200 divided by 4, 800. And 3/4 will be paid in the current month. Into 3 divided by 4, 2400 will be paid in the current month. So yes, we are doing it. Okay, this is 3600. 1/4 will be paid in the next month, that is 900. And 3/4 will be paid in the current month, so 2700. Now you should be aware, this is April, this is May, this is June. So 1/4 will be paid next month, for which we are not at all bothered, because we need to prepare budget of only April, May and June. But out of this, 3/4 will be paid in the current month. So 4000 into 3 divided by 4, so 3000 will be paid in the current month. I hope I have made it clear. I think this was 900. Okay. So what we are going to do is, we are going to add the two parts, since we need only this much for our budget. 750 plus 2400 is giving me 3150. 800 plus, I think it's 2700. 2700 is 3500, and this is 3900. Since it is a payment, so we are going to record in our payment part. So this is the payment of wages. So how much is the payment? 3150, 3500, 3150, 3500, and then 3900, and then 3900. Okay, so we have done with wages. Now overheads. Overheads is half the month. Okay, similar to wages only. So I'm going to rub the wages part. So we have to pay overheads. Overheads are nothing but indirect expenses. These expenses are to be paid by us. So we are going to pay the overheads. So now what we are doing is payment of overhead expenses. Okay, so Feb, March, April, May, June. Okay, Feb, March, April. Half of the overheads is paid the next month. So what we are going to do is payment of overhead expenses. Payment of overhead expenses. Half of the overhead expenses are paid in the next month. So half paid in next month, it means 1700 half. So the half expense shall be paid in current month. This you have to understand it. Current month. So 1700 into 50% is 850. So 850 I am going to pay next month, half, and half I am going to pay in the current month. Similarly, half. So 1900 divided by 2, 950 I am going to pay next month, and the remaining half 950 I am going to pay current month. 1000 here I am going to pay, 1000 here I am going to pay, 1100 here I am going to pay, 1100 here I am going to pay, and 300 divided by 2, so 1150 I am going to pay here. Since we are preparing for April, May and June, so we need to 300 half. Okay, 1150. So we are going to add 1950, 2100, and 1100 plus 1150 is 2250. So I'm rubbing this out. 2250. This is the payment. So we are going to record in our payment of overhead expenses, and it's how much? 1950 to 100, 1950 to 100, and 2250 and 2250. Okay, so we have done with overheads. Now we are reading further. Plant and machinery will be installed in February 2016, okay, at a cost of 96,000. So we are not at all worried with the cost. We are worried when will be the payment be made by us. The monthly installment is 2000 and is payable from April onwards. Okay, so April will be the first installment, and 2000 we are going to pay April onwards. So okay, sorry, 2000 is payable from April onwards. Okay, so we are going to pay from April onwards. So we are going to pay from April onwards. We are going to pay in May and June. So the payment of installment will be done by us in May and June. So payment of installment of machine, April onwards means we will make the payment in June and then July 2000. Okay, dividend at 5% on preference share capital of 2 lakh will be paid on 1st June. So dividend 2 lakh 5% will be 10,000. So 10,000 dividend we have to pay on 1st June. So 10,000 we have to pay on 1st of June, and dividend is always paid yearly, so you don't need to worry about other months. So payment of dividend, so we are going to pay 10,000. We are going to pay 10,000 in the month of June. So this is done. Advance to be received for the sale of vehicles 9,000 in June. Okay, so we are going to receive an advance in June. We are assuming that we have received it. So advance received in June. So how much advance the money is going to come in? So advance received is 9,000. So 9,000 I will write in the June part. So 9,000 in the June. Okay. Dividend from investment amounting to 1,000 are expected to be received in June. Remember, this is the dividend to be received. So we are going to receive dividend. So dividend we are assuming is received. So when we are going to receive it in June, and how much? 1,000. Okay. So I'm going to receive 1,000 in the month of June. Any other part? No, I don't think any part have missed out. So now we are going to do further. So this and this I'm going to add. 6,000 plus 1,600 plus 13,050 is 2,650. Then I'm going to subtract all this. So I'm going to subtract all this. So minus 9,600 minus 3,150 minus 1,950. So I'm going to get a closing balance of 5,950. This was the purpose of cash budget, to prepare the to know the closing balance. This closing balance will be 5,950 opening balance for the May. 5,950 plus 1,700 plus 13,950. So this is 21,600. From this I'm going to subtract 9,000, 3,500 to 100. I'm going to get 5,000. So 5,000 I'm going to get. This will be the opening balance over here, 5,000. So 5,000 plus 1,800, 14,850, 9,000, 1,000. So 31,650. From this I'm going to subtract 9,200, 3,900, 2,250, 2,000 and 10,000. So finally my closing balance is 4,300. So I'm going to give a small brief of whatever we have done. First three sums of part 1 of this chapter, budgetary control, was of functional budgets. That is production and raw material. The part 2 was 4 and 5 was of flexible budget, and there was again a sum of functional budget. Which was quite tricky. Then the part 3 right now, this is the 6th sum and it has covered cash budget. There are other budgets such as overheads budget, but I don't think this is important. These are similar to functional budgets. These are similar to cash budgets. You have to make the payment